You make money when the market goes down. That's the benefit of Phil's gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to Phil's Gang, my podcast. So the market continues to show a lot of red. What's going on? I thought this market was going to boom. Well, here's the problem. Yields are continuing to go up. Now, when you have rising yields, that implies a correction. We saw that correction last year, and I talked about this a little bit yesterday. If you recall, when we had that big rally a year ago, a 20% rally that started in September 2024 and stopped in February 2025, we had a 20% rally. But the difference was that when we started the rally in September 2024, the 10-year Treasury yield was at 3.6%. When it hit 4.8%, we had a 20% crash. Now, the problem this year is we're starting out at 4.1%. So the question is, when we hit 4.8%, will we have another crash? Now, obviously, you would have to say yes, but wait a minute. What are we seeing? What we're seeing is they are, again, increasing the money supply. In 8 weeks, they increased the money supply by about 85 billion, which tells me they're pushing the money supply, okay, to increase stock buybacks. Remember, the only thing that's keeping this market up is increased money supply, stock buybacks, and the ability to have margin debt. So, again, if you take a look at the chart I put up yesterday, people have to make a decision. If you're going to continue to buy the tech stocks and be in the stock market, and if you don't know how to sell short to protect yourself, that's a big risk. And if you don't know how to follow the money and all you do is follow fundamentals, it's a big risk. So common sense would dictate, right, that if we rallied from September of last year to February 25 of this year, and we had a 20% rally, but the minute we went from 3.6 to 4.8 and the market crashed, why would we be so lucky to think it's not going to happen this time? Well, the answer to that, again, is stock buybacks. Stock buybacks are really getting dangerous. Stock buybacks can destroy this whole economy, because the problem with stock buybacks is that all the value is going to a very small group of people on Wall Street, to the top 1%. The Main Street, the consumer, who this whole country relies on, that manufacturers rely on, businesses rely on, businesses in your community rely on, okay, they're tapped. That's the person from, as I said, 35 years old to 48 years old with a couple kids. He's dead. What are they going to do? Cut rates, and that's going to make everything okay? 25 basis point cut, he's going to be fine, he's going to be wealthy again? What are you, nuts? Doesn't work that way. It's the stock buybacks that have been really taking down this economy, and one day we're going to pay dearly for it. But let's talk about the yields for a moment. So again, yields are very important because yields tell you the truth. And as I said, when you have yields that are going up, and we see our yields are going up right now, that tells you that, one, you should be buying value stocks. And we're starting to see now that the yields are climbing a little bit faster because all the big hedge funds took all their cash out of tech stocks, and they moved it into gold about 3-4 months ago. And they because they saw what's coming, they pushed their money into gold. And so the hedge funds are sitting there shorting the 10-year Treasury yield, betting it's going down, but it's not, it's going up. So the 10-year Treasury yield could accelerate very quickly from where it is now at 4.1%. It could accelerate to that 4.8% very rapidly. So keep your eye on the money supply, because that's what you got to follow. If the money supply keeps increasing and stock buybacks keep increasing, then you know that these treasuries that they're betting they're going to go down, they're wrong. They have to buy them back, and it's going to accelerate to that 4.8%. That's the danger point, the 4.8%, because we have proof that if last year when it hit 4.8%, it dropped. Now, if you think about yields are truthful. Okay, they tell you exactly what's going on. And again, as long as the Treasury keeps printing money, remember, when they keep on printing this money, they're also printing money to pay the deficits. And that's very inflationary. It's not the deficits that are inflationary, it's the printing of money that's very bad. That's where you get your inflation from. And as long as the Treasury keeps increasing the money supply, which they did by $80 billion from July to August, I mean, that's incredible, $80 billion. And all for stock buybacks. Now, stock buybacks are, as I said, are dangerous because if you take our corporate debt, it's at a historic high. Corporate debt is at a historic high. And the debt would be great if it was going into business investment. That'd be terrific, because if you put money in business investment, and then you're buying new machinery, new equipment, and then what happens? That increases productivity, that increases jobs. What a wonderful thing. That's how you build this nation, by putting money in business investment. They stopped doing that back in 2008, 2009. Here we are, 2025, and they're not putting money into business investment. You have a handful of companies, tech companies, all this AI stuff, but the companies, the big manufacturing companies and all these companies that make goods for the middle class, okay, they're suffering. And these manufacturers, okay, who got greedy and started to take all this money to do stock buybacks to enrich themselves, they're not competitive anymore. They got machinery that's old, they got IT that's old, they truck fleets that are old. Everything's old. They can't compete. They haven't been keeping up. So the stock buybacks is going to eventually really, it's hurting this country. But we hear so much about AI. And let's talk about that for a moment. This was really interesting. Do you remember Monday, the stock market rallied right out of the gate because of NVIDIA. NVIDIA made an announcement. They're going to put $100 billion into AI. And that morning, CNBC made an announcement. Let me play it for you. You got to listen to this. That was Monday. Let's see, which one was that? Santoy. Listen to this. This was Monday.
The S&P 500 gained 0.4% on Monday, with a huge boost from the 4% jump in NVIDIA after the chip company announced a $100 billion investment over time into OpenAI to develop data centers for AI training together.
So everybody jumped into NVIDIA. We didn't. Jumped into NVIDIA. And then the next morning, what happened to NVIDIA? It turned around and started to go, the rally stopped. All of a sudden, the rally stopped in NVIDIA. In fact, all that gain that you had from Monday, it gave it all back as of today. Gave it all back. Now, and so here's why. So this morning, they turn around and they say this about NVIDIA.
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of NVIDIA, Amazon, and Oracle. Scrutiny of NVIDIA's $100 billion deal with OpenAI, investing in the company, which would then recycle some of the money back to buy NVIDIA processors, raised some questions about the underpinnings of demand in the current phase of the aggressive AI build-out.
Oh, so he brings that up now after you lose your gains. So again, you got to stop following the noise you got to start following the money, okay? And stop following fundamentals. You got to follow the money, the pricing, okay? And again, all this AI is a wonderful thing. Don't take me wrong, but all they have to do to move stocks up was first stock buybacks, and now when you combine all this excitement with AI and stock buybacks, this market has a tough time selling off, and it'll continue to rally. Tax cuts have taken stock buybacks to a new level, and at some point, this is going to destroy the economy. So if you take stock buybacks, as I said, they're very dangerous. In 2018 alone, with the help of Trump's major tax cut, remember that? 2008, we had that major tax cut. The S&P bought $806 billion stock buybacks. They didn't take any of that money to put it into business investment or any IT spending or new trucks or fleets or factories. No, they bought stock. So they reduced the amount of shares they had, and their shares went up. But it didn't go up because their sales increased. No, their sales didn't increase. It didn't go up because their margins increased. It was, as we call it, under an increment. It went up because now they have less shares. So if you have 1 million shares and you all of a sudden buy back 500,000 and you only got 500,000 left, what happens? It goes up. But not because of business investment or being innovative. So again, they think about it, in 2018, that tax cut gave them $806 billion to go do more stock buybacks. Now that's $200 billion more than the record in 2007. Now, people are getting rich, but not the people at the companies where the stock buybacks, the workers at the companies where the stock buybacks are going on, they're not getting rich. The company itself's not getting anything out of it. The only people that get anything out of it is the top 1%, the top management, the board of directors, and the crooks in Congress. We're trading more stocks than anybody else. So remember, these companies are burning cash. They're burning cash like never before. And it's all being burned for stock buybacks. So they don't have enough money, enough cash that would increase sales and earnings through marketing and R&D. You wouldn't believe how the R&D is pretty much shut down. We were a great country because we used to plow all our money into R&D. No more. In fact, if you take a look in 2018, just 38 of the S&P 500 companies, they contribute 75%, okay, of all that money they got. They put it right back into stock buybacks, So, again, 38% of the S&P 500 companies contributed 75% of these stock buybacks. Are you kidding me? So again, you take the Magnificent Seven, which is now, 34% of the S&P, the market cap, 34% of the S&P. And then in 2024, the S&P gained 19%, but 7 stocks contribute 67% of that 19%. What are you, nuts? Are you crazy? Now, and remember, MAGs, 7 stocks contribute 67% of the 19%. So you have the S&P getting 19%, and 7 stocks of 500 contribute 67% of that 19% gain. So we got 7 stocks. Actually, it's not even 7 stocks participating, driving this whole market up. You got about 4 or 5 stocks. Now, in 2025, where we are now, our gains are this S&P gains are about 13%. And you have, again, the MAGs are contributing, get this number, 73% of the 13. So think of it this way here. You got about 4 stocks, in the Magnificent Seven. 4. So think of 4 stocks out of 500 that are contributing 73% of the 13% S&P gain. What are you, nuts? And that makes us the most overvalued stock market in history with the worst concentration of money. We got all this money following a couple stocks, gives us the worst breadth in history, worst increase in money supply, worst stock buybacks ever. And stock buybacks are not making any contribution to productivity. None. Zero. Again, instead, the money's going to the CEOs and his team. 30 seconds. And, of course, the top 1%, and, of course, Congress, a lot of Congress. So, once again, buybacks are a massive, massive drain on the corporate treasuries, taking all the money out of their corporate treasuries for stock buybacks. And there's no money left for anything else. 4. And we'll talk about what happened in 2019 when I get back. Join my gang. Get our stock picks. Phil.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. Join my gang, philsgang.com, free for 10 days. And you get my stock picks. You get to use our Pro 2 color-coded chart. And by the way, that's what's important today, is following the money. Where is the money going? That's what you have to do. You have to follow it. And in a market like this, where stock buybacks have taken over the whole market, the S&P 500 taken over, it's no longer productivity. It's no longer business investment. So you got to learn how to follow that money. And when you have constant increased money supply and stock buybacks, and the market keeps going up and up and up and up, you got to be able to, by following the money, identify when that is going to stop. You got to identify that before it happens, so you can turn around and prepare to sell short, or you're going to get hurt. Now, the bond market will help you do that, because the bond market's never wrong. Powell is always wrong. Listen to this moron, what he says right here. This is incredible.
It's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. it's not incredibly obvious what to do.
What he's saying is, I don't know what to do because I screwed this whole market up. Look what I did. I turned around and I cut rates. Instead of the 10-year Treasury bond yields going down, they went up. That means mortgage rates are going up, automobile financing is going up, everything's going up. Everything's going up. I screwed up. I don't know what I'm doing. That's basically what he's saying. So going back to as I said, if you go back and look in January 2019, 465 companies, the S&P 500, for 10 years leading up to 2019, spent $5 trillion on stock buybacks. That was 52% of their income went to stock buybacks, not business investment. Now hold on. Let's add another $4 trillion for dividends. So that's an additional 39% of net income. So you see where I'm going? So all this money, okay, is going where? It's not going into anything that's going to increase sales or increase profits, real profits. So if you took stock buybacks away today, oh my God, what would happen? So now listen to what they're trying to sell us. Listen to this. And again, Powell's telling us he's not sure what to do, but everything's great. The economy's fine.
Current environment just reinforces the benefits of holding stocks right now. So we have moderating inflation, accommodating Fed, great Q2 GDP and earnings.
No, we don't have great earnings. They're fake earnings. They're make-believe earnings. Because remember, when you do stock buybacks, you're reducing the amount of shares you have. When you're a CEO and say, I'm going to buy my shares back, and your stock is at $50, all of a sudden your stock goes from $50 to $75. Well, did my sales go up? No, they didn't go up at all. My sales didn't increase. So how did it get from 50 to 75? My sales didn't go up. Now the next quarter, my stock price went from 50 to 75 to 100. Next quarter goes again to 100 to 150. The final quarter, 150 to 200. So the stock goes from, let's say, $50 to $250. From 50 to 250. Just use that number over 4 quarters. But there was no sales increase. No sales. They didn't increase. So how does the stock price go up? Well, that's the way it is. You keep taking your stock away, the amount of stock that's available for sale, keep reducing it, keep reducing it, keep reducing it. And then that pushes the stock earnings up without real earnings. And it pushes the stock price up of the stock without increased top-line sales. And it'll all catch up at some point, but not as long as we continue to do what? As long as we continue to increase the money supply and again, increase this stock buybacks, money supply and stock buybacks, they can keep going for a long time. They can do this for a long time. Now listen, now again, he says it's a great time to hold stocks. It's a great time to hold stocks? Are you nuts? What's he talking about? Yeah, it's a great time to hold stocks if you know what you're doing, if you know how to follow the money instead of the fundamentals, and you know how to sell short to protect yourself. So if this does crack, that you're on the other side selling short. And they're telling us how, everything's fine. How can everything be fine when we have the business bankruptcies are up 40% in the last 6 months? Record national debt, record deficits. Look at the undisclosed bank losses, $517 billion. Are you kidding? And then we have historic $8 trillion in corporate debt. What do they need $8 trillion for? Well, they borrowed it. Now, here's the funny thing about that. They can't go to, remember, the Treasury can't loan directly to companies for stock buybacks, but they get around it, okay? They can get around it, all right? And so what's happening is they keep on making sure, okay, that Treasury keeps making sure they keep funding these companies. But guess what's going on now? You have to pay that. You have to remit that money back. You got to remit that money back. Do you know the remittance right now is negative? Corporations can't do it. Their corporations can't do it. They can't pay back the money they're borrowing. It's impossible. They don't have the funds to do it. They don't have the funds because they use all that funds for stock buybacks. So they don't. When you see stock prices going, boy, this company must be doing great. The stock went from $20 to $220 in 1 year. Wow, they must be rich. Well, yeah, we have great earnings. Really? No, they don't. They use the stock buyback to mask the crooked earnings. Unbelievable. That's what's going on. And then the consumer, as I said, if you look at and I'm not going to go through it all. You understand what's going on with the consumer. He's dead. I mean, he's personal bankruptcy's up 28% since January, and he's driven. You talk about consumer debt, unbelievable. And again, if their mortgages are delinquent, their automobiles are delinquent, credit cards are delinquent. You can go on and on and on. So. Here's this guy. Here's what he's saying.
Things are remarkably stable.
Things are remarkably stable. Are you nuts? How could things be remarkably stable? I mean, what a dumb statement that is. When you're sitting there and you got a housing affordability gap of 57%, how is that stable? In other words, a median price home is $462,000. You need $3,600 a month payment. That's without insurance and everything else, and your all your taxes. That's just the payment. You need an income of $125,000 to pay the $3,600 to buy a home for the median home price, average home price $462,000. But the middle class between 35 and 45, he's only making, him and his wife, two incomes, about $75,000. That's a gap of 57%. So how can he say, that things are doing fine?
Things are remarkably stable.
Things are remarkable. So they're stable when bankruptcies are up 24% since January? And we never seen it where savings has never been this low. Never been this low. 2.3%. Household debt, historic, $18 trillion. That's $105,000 per person. Credit card debt, historic, $1.2 trillion. Auto debt, $1.6 trillion. Go on and on and on. And the labor market is awful. It's terrible. That's why he went out and he cut rates, thinking, well, if I can cut rates for corporations, they'll start hiring. How stupid is this guy? As I said before, it's not race that's a problem for corporations. It's confidence. When they know the consumer, the middle-class consumer keeps this country together, he does all the consumption, he's broke. You can give him a 25 basis point cut all you want. He's not going to hire anybody because he knows these people can't go out and purchase. They don't have any money. They're tapped out. So why would he hire anybody? What are you, nuts? So everything they tell you is a bunch of BS. What you have to understand is you can make tremendous amount of money in the stock market as long as you stop following the BS. Don't follow the fundamentals. Follow the money. And you always follow the bond market. The bond market never lies to you. Right now, the bond market is saying, hey, yields are going up. The bond market told Powell to go kiss off. When Powell cut rates thinking the 10-year Treasury was going to go down, the bond market said, well, you're not going to do what's right. You should be fighting inflation, but you're not. So we're going to fight inflation, and we're going to move yields up. And that's a killer. And as I said, let's see how far we get. We're starting this rally at 4.1%. You know how close that is to 4.8%? Remember, the market crashed 20% when we hit 4.8%, but last September, the rate was we started at 3.6. Now we're starting out again at 4.1. These people are nuts. So again, when you have yields rising, that's telling you you're going to get a correction. is telling you to switch to value stocks. But that's not working. It's not working. People don't know what to buy because they always buy the same 5, 6 tech stocks. Actually 4. So they don't know what to buy. We just started to buy oil again. So, and when you have rising yields, it's telling you this, that you got rising inflation. You have low consumer confidence. And fixed income prices, okay? In other words, what's happening, investors now, okay, are lowering their bids on fixed income, corporate bonds, government bonds. And look at the credit spreads. They're narrowing. So again, there's no good news there except if you know how to trade by following the money. And you're always going to be pretty right. If you follow the money, where the money's going, because you always follow the institutional money. If you follow the bond market, it always tells you what direction the market's going, and it never lies to you. And you follow the institutional money, and just, again, if you're going to listen to these people, they're telling you everything's fine. How can everything be fine when we just got rid of 375,000 full-time jobs and replaced them with 600,000 part-time jobs? He's telling me everything's fine? Does that sound fine? What are you, nuts? Jolt job openings are negative. Are you kidding me? They're negative. And look what they did with the job numbers, how they had to revise the fake job numbers by 1.5 million. Unless somebody does something about these stock buybacks and curb them, and every time you do these tax cuts, and the president's going to do another tax cut, that's who it helps, okay? It really helps the stock buybacks. So, and now look at what's going on with the dollar. The dollar is just getting weaker and weaker and weaker. That means everything we import is getting more costly. But they're reminding us, hey, everything is just fine. Don't worry about it. Everything's good. And look at the trade deficits we have. Terrible trade deficits. So when you got, again, all you have to do is watch your credit spreads, watch the increased money supply, watch the credit, okay? As long as margin debt, as long as they keep increasing the margin debt so that the retail investor, okay, the tourist investor I'm talking about, as long as he'll keep buying stocks, as the institutions, the big institutions keep on dumping their tech stocks, they're right there buying them. So again, the market, the question is, can it continue to go up? Can we hit that 4.8% without having another 20% crash? Sure, as long as they do stock buybacks. Join my gang, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.